Hi, welcome to Educationleaves. In this video, I am going to discuss what is standard costing, what is variance, need of standard costing, process of standard costing, advantages of standard costing, disadvantages of standard costing, and how to calculate the standard cost. Let's start the video. Standard cost accounting can be a highly useful tool for managers who are attempting to plan a more accurate budget. Accurate budgets could lead to a profitable and efficient business at the end of the day. This is because a standard costing system provides managers with a projected idea of spending costs. Once these managers can compare the standard cost to actual cost, they will be able to determine if new business practices need to be utilized. So, what is standard costing? Standard costing is the practice of estimating the expense of a production process. It's a branch of cost accounting that's used by a manufacturer, for example, to plan their costs for the coming year on various expenses such as direct material, direct labor, or overhead. These manufacturers will also be able to compare the standard cost to the actual cost. What is variance? The difference between the standard cost and actual cost is known as a variance. The presence of variance indicates a deviation from what was recorded in the profit plan. If the actual cost is greater than the standard cost, management can likely anticipate a lower profit than expected. If the actual cost is less than the standard cost, however, management might anticipate a higher profit than they originally planned for. Let's discuss the need for standard costing. 1. Future cost estimation. Standard costs are determined after considering all the possibilities that may arise in the future. It also helps in deciding whether a particular project is to be undertaken, by determining its profitability. 2. Performance check. Standard cost acts as targets to the cost centers which should not be exceeded. In such a situation, these targets are helpful in checking the performance through comparison with the actual results. 3. Budgeting. The standard costs are used to prepare budgets, and evaluate the performance of the executive staff on the basis of these budgets. Process of standard costing. Step 1. Establishing standards. First and foremost, the standards are to be set on the basis of management's estimation, wherein the production engineer anticipates the cost. In general, while fixing the standard cost, more weight is given to the past data, the current plan of production, and future trends. Step 2. Determination of actual cost. After standards are set, the actual cost for each element, that is material, labor, and overheads, are determined from invoices, wage sheets, account books, etc. Step 3. Comparison of actual costs and standard cost. This step to the process is to compare the standard cost with the actual figures, so as to find out the variance. Step 4. Determination of causes. Once the comparison is done, the next step is to find out the reason for the variances, to take corrective actions, and also to evaluate the overall performance. Step 5. Disposition of variance. The last step to this process is the disposition of variances by transferring it to the costing profit and loss account. Now move on to the advantages of standard costing. 1. Standard costing provides a starting point for your budget. You can start creating your budget with the overall estimated cost rather than the actual cost. 2. It provides information on the efficiency of your performance. 3. This method will help the management team make important decisions to improve efficiency and cut costs. 4. This method can help you effectively set prices for products and estimate a profit margin. 5. Standard costing can make employees more cost-aware, and motivate them to improve their methods of completing tasks, and ultimately making the process more cost-effective. Disadvantages of standard costing. 1. Estimate the standard costs can be time-consuming. It may involve examining previous reports, interviewing employees, reviewing and changing certain processes and procedures, and regularly reviewing the variance analysis. 2. Establishing a standard costing system takes a lot of time and skill. This process may be too costly to implement for small businesses. How to calculate the standard cost. Standard cost can be calculated by the addition of direct material cost, direct labor cost, and overheads. I have discussed what is direct material cost, direct labor cost, overheads in another video. Check that video in the description and in the I button. If you want to read in detail or download the PDF, go through the link in the description. Like the video, and don't forget to subscribe to my channel.